Well, greetings, folks. Bill O'Leary coming to you in this video to answer the question, what is a long-term care rider? So you're going to learn three things. Number one, what a long-term care rider to a life insurance policy is. Number two, how a rider, long-term care rider works. And three, what are the types of long-term care riders? So quick introduction. Again, my name is Bill O'Leary. I'm an experienced estate planning and elder law attorney in Jacksonville, Florida, and my firm is Legacy Planning Law Group. So let's jump right in. Long-term care. You know, many of us are going to need some form of it when we get older, whether for physical or cognitive impairment. The statistics, I tell you, are sobering. Now, as you might imagine, long-term care can get very expensive. And even if you're not in a nursing home, let's say that you're receiving care at home or maybe in an intermediate level, let's say an assisted living environment, it can be very costly. As I like to say, boy, it very quickly burns through the family treasure. So how do you pay for it? Well, you could just use up your own assets, again, burning through the family treasure. Or you can qualify for Medicaid and try to save assets in the process. And I've done a lot of videos on Medicaid planning. But there is another way to pay for long-term care, and that is with long-term care insurance. Now, these days, most long-term care insurance is sold as part of a life insurance policy instead of a standalone long-term care policy, which a lot of times is prohibitively expensive. These standalone policies are sometimes called traditional long-term care insurance. And so the way it works is with the life insurance policy, with the rider, the policy itself will have long-term care benefits that are attached to the policy. And again, those attachments are what we call a rider. A long-term care rider can really provide very useful protection if you end up needing certain medical services that you otherwise couldn't afford. Now, this type of rider, it's similar to what's called an accelerated death benefit, which a lot of life insurance policies have had for many years, but the qualifications are different. While the accelerated death benefit requires generally a terminal illness diagnosis, a long-term care rider can be triggered by the diagnosis of something short of that, but what we call a chronic illness or maybe a cognitive or physical impairment that leaves you basically unable to take care of yourself. Now, a life insurance policy with a long-term care rider, it's sometimes called a combo policy or a hybrid policy because it provides both a living benefit, namely the long-term care help that you get while alive, as well as a death benefit after you die. The living benefit will pay for services that help you perform what's called activities of daily living, called ADLs for short. And so if you can't perform ADLs, a long-term care rider will pay for an in-home caregiver or admission to a long-term care facility. Now, there are two types of long-term care riders. One is called an indemnity policy, and the other is a reimbursement policy. Important distinction. If your policy provides indemnity payments, you get a set amount each month from the policy to use however you want. If instead you have a reimbursement plan, which is the more common of the two, you have to submit your receipts for your monthly bills, and then the insurance company will go ahead and reimburse you for the covered expenses. So obviously, indemnity policies are better, but again, they're less common and tend to be a little bit more expensive. Now, one nice feature of a long-term care rider that's attached to a life insurance policy is that the premiums get locked in. Now, compare that to that traditional long-term care insurance, that standalone insurance policy, where there, the insurance company, they may increase premiums every year. For example, Genworth, one of the largest long-term care insurance providers, typically increases its policy premiums on their standalone policies every year. They just go to the state and get regulatory approval to increase the premiums. But with a combo or hybrid a life insurance policy with that long-term care rider, you're locked into a steady premium rate. Another benefit of a combo or hybrid life insurance policy is you're guaranteed a return on your premium. So if you need long-term care, Well, the premiums you paid into the policy can be returned to you and used to pay for care expenses. Now, again, that's the living benefit portion of the plan. But if you never need long-term care, guess what? Your policy still works as normal life insurance and pays out a death benefit to your beneficiaries when you pass away. Now, look, it goes without saying that adding a long-term care rider to a life insurance policy is going to increase the premium for what you would otherwise pay if that life insurance policy didn't have that long-term care rider. But hey, nothing's free in life. At least you're able to get the coverage for long-term care expenses instead of burning through the family treasure. So if you'd like to know a little bit more about what a long-term care rider is and maybe how we can help, we would love to talk to you. So I would invite you to go ahead and take a really easy sort of initial step, book a free 15-minute phone call that we call here a discovery call. And it's really a chance for us to start the conversation. Scheduling could not be any easier. Just go to the bottom of this video and there'll be a scheduling link. Click on the link, takes you right to our booking page. Pick a day and time that works for you. If you'd like some more information on some other topics of interest, estate planning, elder law, we have a growing body of videos on our YouTube channel. Just subscribe to our channel, Legacy Planning Law Group. And if you've enjoyed this video, I'd love it if you were to like it, and better yet, share it. So Bill O'Leary signing off for now. Go make it a great day and a better world.